Hey, Melissa. Robinhood stock closing 27% lower today in a sharp reversal from that rally just yesterday. It closed around $50 a share, well above that $38 per share price where the trading app went public just last week. But it has been a volatile few days for this name. And part of what sparked the weakness earlier was headlines that insiders can now sell. I've been talking to venture capital investors today who say it doesn't necessarily translate to a wave of insiders dumping stock. They now have the choice to sell. And among the firms in that group of potential sellers today that Robinhood disclosed in a regulatory filing, we had New Enterprise Associates, early investor there, Ribbit Capital, Index Ventures. All three of those firms backed Robinhood back in January during the GameStop saga. And finally, Andreessen Horowitz as well. We did also get a bearish note out from Wolfe Research that could be weighing on shares too. The firm initiating coverage at a $45 price target, calling it uninvestable on both the long and the short side. They say it's too expensive to short, and on the long side, they cite what they call meme stock risk with yesterday's run-up, regulatory risk as well. If payment for order flow comes under more pressure, they say that is nearly impossible to handicap, and they say there are some early signs of weakening retail trading activity. Melissa, back to you.
So, Kate, just so I understand it, the people who are now allowed to sell, are these separate people from the initial quote-unquote insiders who are allowed to sell up to 15% of their holdings at IPO?
So this was disclosed in a July filing. So we knew that there were a certain level of insiders that would be able to sell. This actually goes back to January. If you remember, they raised about $3.5 billion from their VC investors. It was in the form of convertible debt. So it converted to equity at the IPO price. We knew that they were selling. We got more information on exactly how much they could sell, the numbers there. So Ribbit, NEA, for example, is now able to sell about 4% of their shares. And to be clear, they're now all able to sell, but they're still the majority shareholders. NEA, for example, and some of these firms own up to 10% of the company still. It gives them the optionality. We haven't confirmed if they are sellers, and a lot of them, I've been making a ton of calls today. Venture capital investors are very nervous to actually say if they sold. And there's a chance that they didn't. So that's sort of the takeaway here, is that it's unclear. The initial reaction by investors was a little bit of fear that insiders were quickly running to dump the stock, which does not seem to be the case.
All right, Kate, thank you. Kate Rooney with a scoop on Robinhood. Bonawyn, how do you feel about Hood?
I mean, nothing to see here, right? I remember I got up here when we were talking about GameStop and AMC. Grasso alluded to it earlier in terms of supply and demand, but this is clearly an example of this purely being driven by supply and demand. There's no valuation. I lauded some of the research that was being done by the public, by retail investors, where they're going in, looking at short interest, looking at holders, and understanding the mechanics of optionality and how a short squeeze works. I see none of that coming to bear here. There's much less observable data for one to form a trading thesis around. This purely, I mean, what possibly could have come out that would cause a company to lose 25% of its value? I mean, that fundamental question seems to be lost in this whole trading scenario.
Yeah, I mean, it all hinges. This does feel like this is going to be a stock that we are hanging on the last headline for price direction. Yesterday, everyone was reaching for it. Everyone was tripping over themselves to buy it. They wanted a piece of it.
+%.
Exactly. And it's still up 30, 38, 40% from its IPO. So when you have an embedded group of dedicated people, now we could argue over whether the people that actually use it hate Robinhood now or love Robinhood, but you still have an embedded force behind you that will carry your flag ultimately. That you can't bet against for me. And I think we could be looking at the stock at 250, at 300, and no one would be shocked, right? Or you could be looking at a 30, and no one's going to be shocked too. So it's going to depend on the last headline, where payment for order flow goes, and what Gary Gensler wants to do. Is it going to be a pilot program? And does that allow Robinhood to still hang on? And it's sort of in that gray area. But this is not one that I would bet against. I actually thought about buying it yesterday. I said, this is too. I thought about it when it was on its way up, and I said,
going to say, are you nuts?
Yes, yes, but I am a cowboy when it comes to these type of names, and I think most people that play in this name are going to be shoot from the hip type people, and they're not going to be buy and hold.
But today, down 27% didn't tempt you.
No, it does tempt me, and I will be in this stock.
bet, play, and shoot. Those three terms pretty much sum it up.
Associated with this stock, which is maybe how a lot of its trader base, Jeff Mills, regards the stock market, which is interesting.
Yeah, there's no doubt about it. And I didn't read that Wolf note, but the first thing that came to my mind was uninvestable, because as soon as you start getting into that meme stock bucket, it's just very difficult to judge price direction. It can go significantly higher. You have no idea for how long. So it's a hard stock to trade. And I've been hearing a lot of negative longer-term takes on the company, and I hate to pile on, but I'm going to, in just the sense that I don't know that price cutting alone or a fancy front end is necessarily sustainable disruption, and it's enough to drive the company going forward. I think it's a great platform for new traders. That's clear. But beyond that, what's next for the company? I think the average account size for Robinhood is somewhere around $3,500. I have an account for my 7-year-old daughter set up, but once balances grow, once you get a little bit more sophisticated, that gamification element becomes a little bit less appealing, and you still have all of those risks like competition, regulatory risk, even a market downturn, and then obviously the current valuation. So.
Well, the value proposition isn't necessarily unique anymore now that most online brokerages offer $0 trading. Nadine, so you take a look at that in terms of the value proposition, then in terms of the business model, it's payment for order flow, the majority of its revenues, and then within that, it's a concentrated number of participants paying for that order flow. So it seems like risk built on risk here.
Mel, you're right. And I think the point about the payment for order flow is so important, because you just know it's like a game of musical chairs. Sometime all the chairs are going to get pulled out, and you don't want to be the one left playing the game, sitting waiting for the chair that's nowhere near you. And that's what's happening here, right? Is that it's this unknown, but pretty certain that something's going to happen negative in that regard. They're not going to be able to keep all those revenues, which are very profitable. So then it comes down to, well, what is their competitive edge? And because there isn't a lot of trading history, because of who's propping it up, it's really hard to have any kind of fundamentals on this. And even from a trading perspective, getting trading ranges and the like, it's just too wide of a range. So I just sit out. I did read the report, and this is the kind of thing you just say, I'm going to sit out. I'm not going to bet against it. I'm not going to bet for it. I just sit out.